Welcome to the deep dive. Let's get straight to it. Just a reminder, the information we're about to explore is purely for educational purposes.
That's right. Definitely not financial advice.
Okay, so this week has been absolutely packed. Major developments across the board, really.
It really has. A lot going on.
We're going to unpack some of the big ones, huge moves in the crypto markets, these escalating global trade tensions.
Yeah, and some interesting stuff happening in tech and regulation, too.
Exactly. So our goal here is, well, to give you a clear picture of what's been happening and, why it actually matters. We'll try to keep it concise. Avoid getting bogged down.
Agreed. Distill the key info, connect some dots between crypto, trade, tech, all these interconnected areas.
Perfect. All right, let's jump right into the crypto markets then. They've definitely seen some turbulence. Bitcoin's price, wow, it took quite a hit.
It certainly did. First, it dropped to around, what was it, $77,700, a 3-week low there?
And it didn't stop there, did it? Kept sliding down to about $74,500. That's a 5-month low.
Yeah, pretty significant volatility. And what's driving it? It seems really tied into the broader market mood.
How so?
Well, these digital assets, they're proving quite sensitive to the wider economic climate. The drop seems linked pretty closely, actually, to the growing anxiety we're seeing everywhere.
You mean like the trade tensions?
Exactly. That seems to be a key factor. When there's this kind of uncertainty about global stability, investors tend to, pull back from risk.
And crypto is seen as higher risk.
Generally, yes. So it often feels the pressure first or harder in those situations. Risk-off sentiment hits assets like Bitcoin.
Makes sense. And Ethereum wasn't exactly spared either, was it? We saw that massive liquidation.
Oh, yeah. That was huge. Someone's large position getting forcibly closed.
Yeah.
About 67,500 ETH, right?
Yeah, worth over $100 million from a major whale address. And then Symbolic Capital Partners also moved a lot of ETH.
Around 38,000 ETH, I think. Move it onto an exchange.
So how do these big moves, these liquidations and transfers, impact the market?
Well, they can definitely pour fuel on the fire, so to speak. When that much ETH suddenly hits the market or looks like it's about to be sold...
Increases selling pressure.
Exactly. It can increase selling pressure, spook the market a bit, and potentially trigger even more selling. It really shows the kind of sway these large holders, these whales, can have.
But interestingly, amidst all this decline, the Sol Layer governance token, Layer, that actually bucked the trend.
It did, yeah. Hit a new high, $1.65. Pretty impressive gains for the week, and even just for the day, considering the rest of the market.
So what does that tell us when you see one thing flying high while everything else is dropping?
Well, it's a good reminder that the crypto market isn't, one single thing. It's not monolithic.
Right. Different projects, different stories.
Precisely. Even when the overall tide is going out, individual projects can swim against it. Maybe they had specific good news or strong tech adoption or just real belief from their investors.
So you got to look deeper than just the Bitcoin price sometimes.
Absolutely. Understand the fundamentals of individual assets.
We also saw those spot ETFs, the Bitcoin and Ethereum ones, having outflows for several days straight.
Yeah, net outflows, money leaving the funds. Grayscale's GBTC, for example, saw quite a bit pulled out. I bit too.
What does that signal? Institutions getting cold feet.
It could suggest that, yeah. At least in the short term. Maybe some are taking profits after the run-up, maybe reducing risk because of the uncertainty we talked about.
Or just moving money elsewhere.
Could be that too. But seeing it happen over multiple days suggests it's, maybe more than just a one-off adjustment, a bit of a trend.
Okay, but on ETF front, there was some positive news, sort of. The first leveraged XRP ETF launched in the U.S.
Ah, yes, the Teucrium 2X Long Daily XRP ETF. That's a different beast entirely compared to the spot ETFs, though.
How so? Leveraged means more risk.
Basically, yes. It aims to give you twice the daily return of XRP. So if XRP goes up 5% in a day, the ETF aims for 10%. But if it goes down 5%...
You lose 10%.
Ouch. Exactly. And crucially, it's based on daily returns. Because of how compounding works, over the long run, its performance can get really disconnected from just holding XRP. Right. These are really meant for very short-term trading. High risk, high reward, potentially.
Got it. So not for the faint of heart. Now, speaking of holding crypto, look at companies holding Bitcoin. MicroStrategy versus Metaplanet.
Right, a real contrast there. MicroStrategy bought big and early, so even with the dips, they're still showing a floating profit on their holdings.
Because their average buy price is low.
Precisely. Whereas Metaplanet, they bought in later at higher prices. So with the recent drop, they're currently looking at a floating loss.
It really just hammers home how much that entry point matters, doesn't it?
Absolutely critical,
Yeah.
especially with something as volatile as Bitcoin. Timing, or rather average cost basis, is key.
Okay, let's pivot slightly. What about gaming tokens? There was so much hype around blockchain gaming for a while.
There really was. But it seems that sector has hit a rough patch, a significant market cap decline recently.
And none of them are even in the top 100 cryptos right now.
That's what the reports suggest. It's a big shift.
Why do you think that is? Hype fading? Or something more fundamental?
Probably a mix of things, translating hype into actual sustainable value and, more importantly, user engagement. That's tough.
So maybe the games weren't compelling enough or adoption just didn't take off as expected.
Could be. Plus, maybe investor focus just shifted elsewhere in the crypto space. It moves so fast. It really shows how quickly sentiment can change.
But we did see some green shoots. Dogecoin and Avalanche had some strong daily gains recently.
Yeah, some positive movement there, which is interesting. Might indicate renewed interest in certain altcoins, maybe bargain hunting.
But the overall picture is still pretty red.
Largely, yes. Those recoveries are notable, but the majority of the market is still down, reflecting those bigger headwinds. Especially, as you mentioned, the trade situation.
Right, let's dig into that. President Trump's new tariffs, a 10% baseline, maybe higher for some countries. That's really stoked fears, hasn't it?
It certainly has. Fears of a prolonged, messy trade war. And that doesn't just rattle crypto, it hits traditional markets hard too.
Because it means slower global growth,
Yeah.
inflation.
Exactly. All that uncertainty makes investors nervous across the board. They get cautious, pull back from risk, whether that's stocks or crypto.
And China retaliated pretty quickly, right?
They did announce their own tariffs on U.S. imports. Initially, it was framed as just a response, but later reports detailed increases up to, 84% on some goods.
84%, that's not subtle. That sounds like a serious escalation.
It really is. This is how trade wars can spiral. One side imposes tariffs, the other retaliates. Maybe the first side adds more.
And the U.S. was threatening more tariffs, wasn't it? And China said they'd counter again.
Right. So you have this potential cycle of increasing barriers, which is really worrying for the global economy. A damaging, drawn-out dispute looks more possible.
And we saw the impact on stock markets immediately.
Oh, yeah. Big drops globally.
Hmm.
The MSCI Asia-Pacific Index, Taiwan stock market, had multiple limit-down halts.
That's when trading stops, because the price falls too fast.
Correct. Taiwan saw substantial point drops. And even S&P 500 futures in the U.S. fell sharply. People started drawing parallels to the start of the 2020 financial crisis.
Wow, that comparison suggests a really high level of concern out there.
It does. The speed and size of the reaction, especially in Asia, it just underscores how nervous investors are about the potential economic fallout from all this. Everything's so interconnected.
It feels like the markets are just hanging on every word about tariffs. We even saw that weird spike in crypto.
Oh, right. Based on those false reports that there might be a pause on the tariffs.
Yeah, prices jumped and then boom, right back down when the news was debunked.
That little episode just perfectly shows the market's anxiety level. Any glimmer of hope causes a jump, but it's fragile. And it shows how much these geopolitical headlines are driving crypto sentiment right now.
Although, there was some actual good news on that front later. U.S. Customs announced exemptions for some tech products.
Yes, smartphones, laptops, key items were exempted from the tariffs. That definitely provides some relief, especially for companies like Apple, heavily reliant on Chinese manufacturing.
So is that a sign things might be cooling down? Or just a specific carve-out?
Probably more of a targeted measure, I guess, a way to lessen the immediate hit on U.S. consumers and certain key industries. It helps companies like Apple, for sure.
But not necessarily a change in the overall tough stance.
Doesn't seem like it signals a fundamental policy shift, no. More like a tactical adjustment to manage the domestic impact, perhaps. The underlying tensions are still very much there.
Okay. Let's shift gears again, regulatory and geopolitical stuff. Quite a whirlwind there, too. Pakistan appointing CZ, the former Binance CEO.
Yeah, as a cryptocurrency strategic advisor, that's definitely an interesting move.
What do you make of that?
Well, bringing in someone with CZ's profile and, frankly, experience could be seen as Pakistan signaling it wants to seriously develop its crypto framework, tapping into established expertise.
Meanwhile, Hong Kong is still pushing forward, trying to be a major crypto hub. Stablecoin rules allowing staking for ETFs.
They're actively trying to strike that balance, aren't they? Foster innovation, but have clear rules. The stablecoin legislation is key, and allowing staking for the licensed spot ETFs adds another layer for institutions.
And they have that crypto finance forum coming up too.
Right. It all points to a concerted effort to create a regulated, mature environment that attracts serious players. They clearly want to be a leader in Asia, if not globally.
On the other side of regulation enforcement, the FBI ran an undercover crypto money laundering sting.
They did. Sounds like something out of a movie, but it shows law enforcement is getting more sophisticated in tracking illicit crypto flows. Disrupting these networks is a priority.
And the perennial question, who is Satoshi Nakamoto?
Huh.
There's another lawsuit trying to force and reveal.
Ah, the great mystery. Will we ever know? There's clearly still a huge amount of interest, legally and otherwise. Whether this specific suit succeeds, who knows? But the Satoshi enigma lives on.
Back in the U.S., New Hampshire passed a bill allowing the state treasury to actually invest in digital assets.
That is significant. Alongside precious metals, it signals a growing acceptance at the state level, treating crypto as a legitimate asset class for potential diversification.
Could pave the way for others.
Potentially. It's a step towards broader integration within traditional finance.
And President Trump signed that resolution getting rid of a crypto tax rule. I imagine the industry liked that.
Oh, almost certainly. Rolling back rules seen as, unclear or overly burdensome is generally welcomed. It might simplify things for users and businesses.
Then there's the SEC versus Ripple saga. They jointly asked to pause the appeals because of a possible settlement
That was a big development. That case has dragged on forever and has huge implications.
for how other cryptos might be classified, right?
Exactly. A settlement could bring some much-needed clarity or maybe create new confusion, depending on the terms. But the fact they both asked for a pause suggests serious talks might be happening.
Senator Gillibrand was also talking about 2025 being pivotal for U.S. crypto legislation, still pushing for stablecoin rules.
Yeah, the push continues in Congress. Stablecoins remain a major focus, given their size and potential systemic links. Getting bipartisan agreement is still the challenge, though.
And it's not just the U.S. Japan's looking at crypto classification, asking for public input.
Right, regulators everywhere are grappling with this. How do you fit crypto into existing frameworks? How do you protect consumers but not stifle innovation? Everyone's trying to figure it out. Seeking public comment is a good step.
And speaking of regulators, the SEC okayed options trading for the Ethereum ETFs.
Another step integrating crypto further into traditional finance. Options provide more ways to invest, hedge risk. It adds sophistication and liquidity to the market for ETH exposure.
We also got a new SEC chair confirmed, Paul Atkins. Any sense of how he might approach crypto?
Well, based on his past comments and background, there's definitely speculation that he might bring a, let's say, different perspective than his predecessor. Perhaps more open to innovation, clearer rules. The industry is watching very closely.
Not all smooth sailing, though. That Taiwanese platform, Staker, facing allegations, which they deny.
Yeah, that highlights the risks still present. Due diligence is crucial, and regulatory compliance is non-negotiable. These situations are reminders of potential pitfalls for investors.
And reports of Binance execs meeting Treasury officials, and maybe even exploring a deal with the Trump family's crypto project. That's intriguing.
It suggests a lot of maneuvering behind the scenes. Binance, being such a huge player, is constantly navigating the regulatory maze and looking for strategic angles. The Trump project link adds a whole other layer of political intrigue.
And just quickly circling back to trade, the EU is also hitting back against U.S. tariffs now.
Yep, confirms it's a global tit for tat. The repercussions are spreading.
And that TSMC investigation over chips potentially going to China's SoftGo against export rules.
That could be huge. TSMC is critical to the global tech supply chain. Any violation of export controls, especially involving advanced chips in China, has major geopolitical and industry implications.
Okay, wow. Let's shift to tech and industry news. Mega ETH. They're claiming big steps in transaction speed.
Yeah, faster processing, better scalability, always crucial for blockchain. Improving performance to compete with traditional systems is key for wider adoption.
CoinGecko got a makeover. New logo, mascots.
A little brand refresh keeps things looking current in a fast-moving space. They're a go-to source for money.
Binance was busy too, delisting some tokens, adding new trading pairs, perpetual contracts.
Standard exchange activity, really. Culling inactive or problematic assets while adding new options to meet trader demand.
Babylon's mainnet launch sounded interesting, enabling Bitcoin staking.
Yes, and integrating with Axelar. It basically lets Bitcoin holders earn yield by helping secure other networks. It unlocks new utility for BTC and connects different blockchains. Pretty cool for DeFi.
And Kraken, teaming up with MasterCard for crypto debit cards in Europe, making it easier to spend crypto.
Definitely. These cards bridge the gap. Use your crypto balance anywhere MasterCard is accepted. Big step for usability and mainstream feel.
Even seeing AI intersect more with crypto, ChatGPT got smarter memory, more AI tools popping up.
Yeah, that's a growing trend. AI for trading bots, security analysis, data insights. Lots of potential there. ChatGPT's upgrade might fuel more advanced tools.
Unfortunately, security remains an issue. That supply chain attack hitting Atomic and Exodus wallets.
Oof, yeah. A nasty reminder. Supply chain attacks are tricky because the vulnerability is in the software build or update process itself. Users need to be so careful.
Kevin Rose reviving Dig using crypto tech for logins. Web 2 meets Web 3.
Interesting, right? Using blockchain for authentication gives users more control. Shows even established platforms see value in crypto concepts.
BNB Chain's testnet got faster with a hard fork. Good for their network.
Yep, constant improvement is necessary. Faster transactions, better capacity essential for user experience.
I've launched a token buyback, returning value to holders.
That's often the goal. Reducing supply can theoretically support the token price, common mechanism in crypto and traditional markets.
Bidget listed the Babylon token, BBABR. More visibility for them.
Listings are key for new projects, gets a token in front of more traders, increases liquidity.
And Huma Finance launching on Solana for decentralized yield. DeFi keeps innovating.
Absolutely. Finding new ways to offer yield, especially on faster chains like Solana, keeps the DeFi space dynamic.
Okay, last section, some of the stranger developments. That meme project, RFC, Retard Finder Coin. It surged, got celebrity attention.
Yeah, the meme coin world is wild. Shows how fast things can blow up based purely on hype, social media, and sometimes offensive humor. Highly speculative.
But celebrity involvement can backfire. Slash from Guns N' Roses left Twitter after hacks promoting fake coins.
Right. High-profile accounts are huge targets for scammers. It's a real risk, both for the celebrity's reputation and for anyone tricked by the fake posts. Be skeptical online.
That story about cracking the Trezor wallet with tons of Bitcoin was wild, too.
Fascinating. Shows hardware wallets are strong but not magic. If you mess up handling your keys or recovery phrases, even they can potentially be compromised. Security hygiene is paramount.
And life imitating art with that Black Mirror episode about meme coin stunts actually leading to real tokens being made.
Surreal, isn't it? Speaks volumes about crypto culture right now and how intertwined it is with internet phenomena and even fiction.
Taiwan planning to use convenience stores as emergency supply points, and the potential role for crypto in a crisis.
That's a really thought-provoking idea. If traditional banking or payment systems go down in an emergency, could decentralized currencies offer a resilient alternative for essential transactions? Interesting potential.
And those rumors about CZ providing evidence related to Justin Sun. More drama.
Yeah, suggests ongoing investigations and potential fallout from major figures in the space. Lots of legal scrutiny continues.
Finally, Hong Kong forming that digital asset alliance, another sign of them getting serious.
Definitely. Bringing together government, industry, academia, it signals a coordinated push to build out their ecosystem and solidify their position as a hub.
Well, that was a lot, a really eventful week, tying together crypto volatility, global trade jitters, regulatory moves, and ongoing tech progress.
It really highlights how interconnected it all is, doesn't it? Crypto doesn't exist in a vacuum. It's influenced by macroeconomics, geopolitics.
And regulation is constantly trying to catch up with the tech innovation.
Absolutely. It's a complex, dynamic interplay.
So as we wrap up this deep dive, maybe here's something for everyone listening to think about. Given how tightly linked traditional finance, tech, and geopolitics are becoming, how do these recent events change how you think about risk and opportunity?
Yeah, not just in crypto, but maybe more broadly, too. How do you navigate this increasingly complex landscape?
Worth considering the long-term ripple effects of everything we've discussed. Thanks for exploring these deep waters with us today.